Alrighty. So here we are, EU. Today is 11:16, and let's bring up our higher time frame look. So this is our 1 hourly chart, and if I just slip back to the daily here, we can see on the daily we've got a primary order block that we've come into to mitigate. Um, Mitigated something nice here, real nice order block mitigation, and so we can realistically expect a reaction. I don't know if we're going to react down as far as this, for example. I don't know if we're going to react from here. We could keep going moving up. This could just be at the start of a reaction. But I feel very confident that we will have a reaction from this daily, monthly, weekly order block. Unless there's some sort of news that pushes us right through it, I think we will react. And a reaction to me will look like something significant, a significant pullback that does take out lower time frame structure. That's what I believe will occur here. Now, if we do push through because of news or something happens, then this will become what I call a transitional order block, which is where we will likely react out of it just after the fact. So we'll push through and then we'll figure out a way of reacting and mitigating in and out of the order block. So over the next few weeks, months, days, it'll be fun to sort of see what actually happens here. Anyway, on the 1 hour, all we can do is just assume, right? Based on what we see. So on the 1 hour, we mitigated. We had this lower time frame zone here, and had our mitigation and then pumped through it. I was expecting a reaction out of here because this is our higher time frame order block, a big stacking of orders that pushed price up. So if we are going to fall back for for some more liquidity, here's where we're going to do it before making our move upward. It doesn't always have to work like that. We can also take out liquidity from here before the move goes up as well. The other part about this that I'm interested in is after the mitigation, typically, if we are going to go short from here and pull down, the first target is going to be to take out this big stack of orders. This, I call it a transitional order block. Basically, it's just an area that we're likely to sort of run through, and which then becomes transitional. So right now, we're working on it. That was a very deep mitigation. And so what is a deep mitigation? Number one, it takes all the liquidity in the block. So it could be seen as a bullish sign, but it also could be seen as a bearish sign because it's stacking liquidity for a push down. Again, it could be a temporary bearish sign just to stack liquidity in this area, mitigate from here, for instance, before pushing up again. Or it could just be that once this gets taken, that is just the sign that this is the new high and that we're going to keep on working down. So that's what I'm seeing here on the 1 hour. And then I use a 5 minute chart here. It's a little dirty. It's got it's not as clean as it could be. But I've been really just observing where all of the what I call sell primaries and buy primaries are on the chart now. I color them differently. So this is a sell primary, this is a sell primary, and this right here was just a regular a buy to sell. A sell primary takes liquidity from an order block that has broken structure. This was, or is, I should say, a buy primary. So we're in a kind of an interesting situation. I'm favoring sells, but right now I'm favoring both sides actually. I'm in both sides, but I'm favoring sells right this second because here was the stack, right, for the buys. And so these order blocks here, range initiated and broke structure, so the upside. And so what we've done is come back in, and it was this range that came in and took the liquidity from them and then broke upwards. However, how did it break? It broke with a wick. So I'm not, and this is a 5 minute chart, so I'm not like super convinced that this block will become a buy primary. And if anything, I believe it's just going to fall on itself. But as we can see, as we're sort of straight back into it, so as soon as we broke structure up here, we came straight back into it. And what are we doing? We're initiating prices down, likely to see a reaction from somewhere in here or in here. But as we are initiating these lower prices, we're having reactions all the time. And so what one of these primary order blocks are, is just a reactionary zone, an area where we would sort of expect a reaction. And so this is exactly what we're seeing. We're seeing a reaction, yet we're still going bearish. And so I'm thinking in my head that this looks to be like a zone that's just going to be for liquidity purposes. It was literally just to grab liquidity here, react in and out, in and out, in and out before breaking structure down here and moving lower. That's what I think. Whether I'm right or wrong is yet to be seen. Now on the sell side of things, if we just get rid of that for a second, we had this this range here, sell block, broke structure, added liquidity to the top. This is where everyone moved their stops. And so they came in, took the liquidity, and then broke structure down here. Now this one, again, was just a little nibble before coming straight back in. But see how it's done it differently. This block here, yes, we came straight back in, but we came straight back in for an immediate one-time reaction before breaking structure. This one's had a reaction, had another reaction. So it's very reactive. Which could mean many things, really. It could be that they're just trying to do that to stack money in this area, and it's going to become liquidity for a future run. Absolutely a possible scenario. But the difference in this is this has got more speed and aggression to me. The speed back up and then its reaction out as well, very reactive. So I'm quite comfortable in thinking that we could be shorting from here, and it seems like the logical thing to have happen. That's my perspective anyway. We've also got a higher time frame forming here. Here's a sell block, and here would be the primary sell, but this isn't active yet, but this would be what it would look like. So if it came and broke structure down here, then this would be a sell primary, and that means we would expect price to come back into here, or when it does come in back into here, we'd expect a reaction. Whether it breaks structure and continues or not, that's not what we know. Anyway, there's my 1 minute. There's my 5 minute. Let's get down to my 1 minute because I took 2 trades today. Very similar to yesterday. Let's get rid of this. Very similar to yesterday. Look at the take profit, just comes straight in right there and then rejects. This is just 10R. That's the only reason I've got my stop, my take profit here. But as you can see, just the nibble right here. But let's explain the trade and go into it. So I'm seeing price has, as we've seen on the 5 minute, it's come back in, and we're looking at potential buy opportunities. Well, where would I buy from? I would buy from another primary that was created, right? And so as we can see here, we had a range, an initiation that broke structure. What does that do? That stacks money right in this area. They came back immediately, took that money, and then initiated higher prices. That becomes a primary for me. So I always expect a reaction from it and either a continuation. It's basically a RIMC, range initiation, mitigation, continuation. That's really what it is, but it's just about identifying those because these are often protected by BFI, banks and financial institutions, right? So price came in here, nibbled it, broke structure. And so on a lower time frame, I'm looking to see if I can see any primaries being formed. Because if I see a primary being formed after a touch inside of another primary, a perfect buying location, then I can build upon that and I can get into the market, right? Which is exactly what happened over here. So reaction, break a structure. What happened within that A to B leg? We created a range a sell to buy that broke structure, right? So RIMC, range initiation, mitigation, continuation. So there'll be a lot of people in here, like who are trying to go long, range initiation, got stopped out because this was the actual liquidity and we're looking for a primary. This is not a primary, this is just a regular order block. So they did it again. Range, initiation, another break of structure. This is something I've been noticing is when we're gearing up for buys or a reversal, what we'll often see is that we'll range and then we'll break structure. And they'll keep doing that as they're accruing their position. They'll break structure, but structure doesn't have to hold. It doesn't have to mean like, oh, we have to actually break this structure. It's tricky. But they'll do it again. Here's another range. Where's the break structure? Right here this time. We had this big stacking of orders. And so it was like almost like a liquidity grab, break a structure at the same time. Then let's just clean this up. So if we assume that this is a range initiation, break a structure, what comes in? A primary, it takes the liquidity and breaks on itself. So the moment it broke on itself, I would have liked to have seen it break here. But the moment it broke on itself, because this is a complex range and because we've done it twice, I was very interested in this order block right here. Let's pull down to a lower time frame. Go 15 seconds. So as soon as this primary has been created, I'm looking at everything. I'm going, where is it logical for me to enter? And for me, the most logical place for me was underneath the liquidity. I'll always enter under liquidity, right? I always want to enter underneath liquidity. Remember, this is the range that we're playing, right? I'm assuming that this low will hold, and I'm just playing a reaction from in here and then to go. And so as I observe what's happened, I see that we've got this range initiation. This order block mitigates this one. Let me draw it in to be specific. Excuse me. Okay. Range initiation takes liquidity, mitigates, comes back in, range initiation. Who's the last unmitigated range? This guy right here. And I'm thinking at this point, what is this range? This is what I call a primary range, which means RMC all day long. That's what a RMC is, a reaction from my range. So yes, I'm interested in entering into this order block. Yes, I'm interested in going underneath liquidity. Here's liquidity stack. And so realistically, this whole thing right here is the order block, right? I know that I want to enter underneath here, not from the top, from underneath liquidity. So this is exactly where I want to enter. However, I've been able to narrow this order block down just a little bit more, because if you look at this order block here, what do these bars represent? Down and up. This is a wick. This is what a wick looks like. A sharp down and a sharp up and away. That's what wicks are on all time frames. Sharpness in the market, speed, aggression. So for me, I know that this is where I want to enter, under here, and I know that this is the entire order block, but this, to me, is where the meat and the potatoes of the order block are. This is where we got all of the activity, all of the buying and selling, all of the ranges in here. This is just wick. So I'm thinking to myself, let's just get my entry that enters below that liquidity and has a stop that covers this area here. Because if we're going to dip into wick, it'll likely only be, if they're going to come into it, it'll likely just be into it a little bit. If they are going to do it, but the likelihood is negligible, because if they're going to mitigate, they're going to mitigate here. This is where we want to see a good mitigation from. And if we break through this, well, it shows weakness and it's not really validating my my trading setup, right? So anyway, put a risk entry here and wrote risk entry reaction from well, hold on. The reaction from a good area equals break even. That was later. We'll talk about this in just a second, but let's just see the entry. So the entry is I get nibbled and price initiates away. So then I've updated this and I've gone, well, this was a risk entry and my reaction was good. I had a great reaction from a very good area, and so I want to go break even as soon as possible. Typically, I wait for a break of structure, but on this one, I just went BE immediately. I just felt like that was such a great entry. I didn't want to take any risk, any further risk. Really, that was just a personal decision. So they create this order block, came very close to taking me out, but didn't take me out. I stayed in somehow on this candle. This candle here was one of those ones, I don't know if you've seen it, um, but on a 15-second I see it quite often where you'll have, price is just doing this at one level, and then all of a sudden it goes, you see a bar, like it's big black bar, and then all of a sudden it's a blue bar, like within a second, and that's exactly what happened here. It sort of came down and went, like, and if we look on a 1 second chart, you can see boom, boom. And I think that's the reason I didn't get tagged out, is because I can't explain it. I don't know what's actually going on there, but suffice to say, I stayed in at that point. Price initiates away. I'm thinking I'm hunky-dory or rosy. I'm expecting to break the structure up here. Don't get it, and I get taken out right here. But I do understand what's happening, right? So yes, I get taken out for break even, but I do understand that this is a range and initiation. Yes, it made equal highs. You could consider that a break of structure if you want to. I did. And so I went range, initiation, break of structure. That adds liquidity here. They come back for liquidity. And if they break this high, then I've got a new primary. Let's see what happens. Sure enough, breaks the high, I've got a new primary. And it was at that point where I was just in frustration, been taken out of my trade. And just like yesterday as well, I'm not sure if I'd have even got the take profit, to be quite honest with you, because as price comes up, it literally just comes up and reverses away from my take profit area. I didn't pick it specifically. It's just 10R. That's the only logic behind that. So there's my one and only buy trade. I was trying to sort of find new entries and whatnot, and have been trying, but I say trying. I'm just waiting for the perfect sort of time and whatnot. I've been observing it all. The thing is, I'm seeing a lot of sell momentum now come into the market. So let's talk about the sell momentum. I did take a sell here as well. So let's have a little talk about this. So we've got all these sell primaries. Again, I've identified them with the darker gray as my sell primary, and the lighter grays are my just regular order blocks. And so I see here, actually, let's just go back real quick. I don't think I did show everyone here. See how price just comes up to that take profit line and then reverts away. So I don't know if that would have got tagged or not. I trade with Oanda, and their spread is rather vicious, and so sometimes I may or may not. It's impossible to say with that one, but because I wasn't still on the trade. But if I had have left my stop open, definitely would have been interested in seeing if that got taken or not. And I've left this, incidentally, I would have had this trade completely left open. Like if I was still in the trade and that hadn't have taken profit, I would still be break even right here. I don't change 5R, 2R, whatever. I don't try to just take 1R away from it. No, I'm 10R or nothing. 10R or nothing. Anyway, back to sells. So we come up here, and so again, just like I was doing down here, I'm looking for signs of which could show me reasons why we might be going short. And here's a 15-second chart. So I see this range, initiation, break of structure, and then I see this come up here, right, and form a primary. Break structure to the downside again. And so what am I expecting? Now that we've formed a primary, I'm expecting that as price comes in to have a reaction. And I really like the look of this one. I'd analyzed this entire thing because I was really trying to get an entry here. And it was basically, I was thinking, this is the range and the pullback, the break of structures here. So it made logical sense that this would be the one to hold, right? That's what I had in my head. This is most likely the range to hold, because I was thinking I could just take a risk entry here, let's say 2 pips or whatever. And, but more times than not, I've seen these ones just get taken. These are sort of liquidity sort of ranges. And again, I'm always looking for primary. So I want to trade off of a primary, not just a RIMC if I can. And so I'd seen all of this happen. This was left unmitigated. This was left unmitigated, which is the one. I could have just taken a risk on this one up here. But then you can do it forever. You could say, well, the risk should actually be up here in origin of the move. So it's hard to sort of say for sure. So what I did, I wanted to watch this one. So I watched it. I watched it form, watched it happen, and I saw as it started pulling away, I thought to myself, well, what's the first thing that's going to happen? What is a mitigation? What tells us that there's a mitigation that has occurred? Fast movement, number one. Um, Ranges that get taken within just a bar or two, and these are all just buy ranges in here, and they got slammed within a time or two. And so I was thinking to myself, and you can see this arrow here, I was like, well, look, this range has been mitigated, right, by this range, because it came up, mitigated, and then it formed a new range initiation, comes back up, and it mitigates itself. I was thinking to myself, well, this is the only unmitigated range, right? So wouldn't this be a good place for a price to return to? And as I'm saying that to myself, I see this, right? And on a lower time frame, what is that? What is that? That's a mitigation, is what that is. So price came down, mitigated this block, and then aggressively moved away. So for me, I'm like, okay, happy days. Where are we? Let's keep going over there. So I'm like, okay, happy days. I've understood that. All these three items here, order block, order block, order block, have been mitigated. This mitigated it. These two have been mitigated by themselves. They've all mitigated everything here. So where do I need to play from? And so I see prices come down here. It's mitigated this range right here. And so I'm like, okay, well, look, there's this part left of this order block left to be mitigated. I call these transitionals. And notice how there's fast up, fast down. So it's likely then that we're going to come mitigate this. And so I see that happening. And as soon as I see a rejection, it comes through this transitional order block. And as soon as I see it start rejecting away, I want in. And the rejection, I believe for me was, I think maybe it was like this breakdown here. I already had my tool in place. I knew where I wanted my stop. And so this is kind of how I do it. I trade off of the tool. And I go create limit order. It pre-fills out all the information for me. So that's why it looks over here, but the actual entry, I believe, was more like this. Okay. Now, this one went BE as well, unfortunately. So it pushed away, broke structure, and I went break even. So this one went break even as well. And I wrote this at the time. Why do we keep reacting out of a primary? So once we've formed the primary, why do we have to come straight back into it? And why, again, over here, why are we keep coming back into the primary? So it's like fishy, like if this is a primary, this should be a bit like this, right? So we've got a range, we broke, structure's been broken somehow, right? We come back up, they take from the liquidity that's stacked up here, and then they push away. This forms that primary range, and then, eventually whenever they choose to, they come back in, take the liquidity again, and rinse and repeat, right? This becomes the new primary. So why are we coming straight back into a primary and then create a new one, straight back in as well into a new one? So I was thinking that's fine. Maybe it's just a liquidity thing, but it's not something I'm typically used to seeing as far as like in a trade that's going to work out real well. So I think that's what I was thinking to myself. And now we're getting sort of potential, another look at it. We could see this. Let's clean that up. We could actually see this now as this was just the regular range, a sell range, stacking liquidity. And now they're kind of come up. Who is it? It's this guy right here, right? This guy would become our sell primary. Look at the speed and aggression away. So it's definitely, and then they add to their position. And then they initiate away. So I'm not saying it will, but this looks like that's what this was for. And so now we understand why this didn't, and there it goes, broken that. It's likely to break this structure immediately. I believe this is gone. So now we can understand why. So when we see things that aren't like, it's not doing what I was expecting it to do. That's the time, in my opinion, when we really need to sort of reanalyze and re-understand what's going on. And so now we get it. I'm glad I went BE on this one, break even. Sure enough, this has been happening to me the last couple of days, and it's getting a little frustrating. If I leave my orders open, my stop losses open full risk, I would have likely taken profit here, I'm going to guess. And then this one was a definite no. This wouldn't have been a loss. But I would have maybe been interested, in seeing, as soon as we saw this mitigation here and whatnot. But it's hard to say. It's hard to say. I can't say in hindsight. In hindsight, I'm like, yeah, I wish I was in it. But you never always get that, right? So there's my analysis on the day. Two trades, two break evens. Very happy with my logic, my understanding, very happy with how I traded them, and very happy with how I understood the markets today. Happy trading, everybody. I hope everything's going awesome. And yeah, happy trading. Hope you're making a lot of R. Aloha.